Master your mind. The hidden game of trading. Sounds dramatic? That's because it is. Trading is one of the few professions where your worst enemy is also your only employee. You can study the markets. You can master chart patterns, order flow, or algorithms. But if you don't master yourself, none of it matters. Before we dive in, a quick but important note. This video is for educational and informational purposes only. It is not financial advice. I am not your financial advisor, and nothing here should be considered a recommendation to buy or sell any asset. Trading involves risk. And your greatest risk might just be you. Have you ever taken a trade you knew was wrong, but couldn't stop yourself? Or doubled down after a loss, trying to win it all back? Maybe you had a great plan. Until greed or fear took the wheel. If that sounds familiar, you're not alone. And you're not broken. You're just playing the wrong game. You think you're trading gold, NASDAQ, or oil? You're actually trading your beliefs, your fears, and your emotional patterns. That's the hidden game. That's where real traders are made. In this video, we'll break down the 15 core psychological battles every trader must face. We'll talk about the traps, the turning points, and the mindsets that separate the amateurs from the consistently profitable. You won't find technical setups here. But if you're ready to stop sabotaging yourself and start playing the real game, then let's begin. Chapter 1. The first fall. The first time I blew an account, I didn't cry. I didn't punch the desk. I just stared at the screen, silent, blinking at the numbers like they might change if I looked long enough. Gone. Days of effort. Weeks of studying. A balance I swore I'd protect this time. All of it. Vanished in a single morning of reckless decisions wrapped in false confidence. And the worst part? I knew what I was doing. That's what made it unbearable. It wasn't a flash crash. It wasn't some freak move. It was me, clicking, sizing up, ignoring stops, chasing. Fully aware, fully conscious, and completely powerless to stop myself. I watched my own hand execute the destruction like I was under some spell. Afterward, I told myself it was just money. That I'd learn. That I'd do better next time. But beneath the surface, something deeper broke. Not just my account. My identity. Because in that moment, I had to face something most traders never say out loud. I am not who I thought I was. I thought I was disciplined. I thought I was logical. I thought I was prepared. But when the pressure came, when the market turned, when the losses started piling, when my ego was on fire, all of that collapsed. And what I was left with was a question I didn't know how to answer. If I can't even control myself, what am I doing here? Every trader has a first fall. A moment when the myth of mastery shatters. When the market strips away your plans, your beliefs, your confidence, and shows you who you really are. That moment is brutal. But it's also necessary. Because it's the first time you meet the real opponent in trading. Not the market, not other participants, not volatility. You. And if you're lucky, that first fall becomes something more than just a loss. It becomes a mirror. A wake-up call. The crack that lets in the light. Because from that moment forward, everything changes. The game becomes less about setups and more about psychology. Less about entries, more about endurance. You stop searching for perfect trades. And start building a more stable version of yourself. So if you're in that moment now, if you've just taken a hard hit and you're doubting everything, let me tell you what I wish someone had told me. This isn't the end. It's the beginning. The beginning of trading like a professional. The beginning of self-awareness. The beginning of finally understanding that what stands between you and consistency is not knowledge. It's behavior. Here are 3 steps to stand back up and start walking again. 1. Write down exactly what happened. And why not just the trade? The emotion. The shift. The moment you broke the plan. Be honest. Brutally. This is your blueprint for avoiding the same fall again. 2. Shrink the battlefield. Reduce your size. Cut your watch list. Focus on one thing. Create a space where you can rebuild confidence without chaos. 3. Build a rule you refuse to break. Just one. A hard line. A small line. Maybe no trades after 3 losses. Maybe stop if tilted. This becomes your anchor. Your proof that you can control something. The first fall hurts. But it humbles. And in trading, humility is not weakness. It's where real strength begins. Because the market doesn't care if you're smart. It only cares if you can survive yourself. Chapter 2. The 2 traders inside you. I remember the first time I truly saw it. The split. The moment I realized there wasn't just one version of me trading the markets. There were 2. One of them was calm, logical, composed. This version had a plan. It journaled. It waited. It accepted risk. This trader was confident in a quiet, grounded way. It didn't care about being right, only about following the process. When I visualized this version of myself, I saw a professional. Someone I respected. Someone I trusted. The other version? That one was a wreck. Desperate. Impulsive. Easily seduced by the flashing candles and the fear of missing out. This trader would move a stop just to avoid the pain of being wrong. It would jump into the market because someone on Twitter posted a chart with red arrows. It traded to escape emotion. Boredom, frustration, fear. Not to execute a strategy. And worse, it always showed up after a string of losses or a win too big to handle. Most traders don't realize it at first, but these two versions of themselves are always in conflict. There's the trader they want to be, and the trader they become under pressure. I once coached a guy named Diego, a quiet, incredibly disciplined software developer from Argentina. He started trading as a hobby during the pandemic and quickly became obsessed with data. He built his own backtesting engine, coded indicators, read over 30 books in a year. On paper, he should have succeeded. But in reality, he kept blowing up his funded accounts. Not because of his system. It was actually quite solid. But because of what he called the blackout moments. That's what he named the times he would suddenly abandon all logic, all planning, and over-leverage on a random setup he'd never even traded before. It was like watching a robot get taken over by a ghost. Those blackouts were the second trader showing up. The emotional self hijacking the rational one. Then there was Anna, a trader in her 50s who had worked as a risk manager for a multinational bank. She knew more about managing large positions than most hedge fund traders I've met. But when it came to her own personal trades, she would freeze. She once watched a $3,000 profit on oil turn into a $2,800 loss because she couldn't click the close button. The same woman who used to sign off on million-dollar hedging strategies was now paralyzed by the thought of taking a small win. Why? Because she wasn't just trading oil. She was trading her identity, her need to feel in control, her fear of disappointment. What I've learned, both in myself and in hundreds of others, is that the battle between these two traders never fully disappears. The calm version doesn't eliminate the emotional one. But with awareness, training, and structure, you can make sure the right version is in the driver's seat most of the time. I've learned to catch myself now. When I feel the second trader creeping in. The anxious clicks, the racing thoughts, the need to fix something. I step away. Even just for 5 minutes. That's enough time for the rational self to regain control. Most people think trading is about controlling the market. It's not. It's about learning to control which version of you shows up to trade. Because every time you open a chart, both traders are sitting at your desk. And only one of them deserves to have their hands on the mouse. If you take nothing else from this chapter, take this: you are not broken. You are just divided. And that division can be managed. But only if you're willing to stop lying to yourself about who's really trading. You don't need more information. You don't need a better setup. You need to decide which trader inside you gets to execute. Every single session, every single trade, is a choice. And if you don't make that choice consciously, the other one, the reckless one, will make it for you. So here's your challenge starting today: choose the trader you want to be. Not in theory. In execution. That choice is made in what you do, not what you feel. To help the good trader win more often, here are 3 simple but powerful steps. 1. Create a pre-trade ritual. Before placing any trade, stop for at least 60 seconds. Take a breath. Ask yourself, who is about to take this trade? The plan-driven me, or the emotional me? Make this a non-negotiable ritual. It's your moment to choose clarity over impulse. 2. Build a trading persona. Write down a short description of the trader you want to be. How they think, how they act, what they never do. Keep it visible on your desk or platform. This gives you an identity to anchor to when pressure hits. 3. Use physical cues. Anchor your rational self to a physical action: standing up, clicking a checklist, or touching your trading rules card before executing. It may sound small, but the brain links physical movement with mental state. Use that to shift control back to the right trader. The war inside you is quiet, but the consequences are loud. Choose who you want behind the screen. And build the habits to let that version win. Because in trading, the enemy isn't out there. It's in here. And if you don't learn to manage it, no strategy will ever save you. Chapter 3. Why smart people lose. One of the biggest shocks in my early trading years was seeing how many highly intelligent people failed and failed badly. I don't mean just losses. I mean total meltdowns. People with master's degrees, engineers, former surgeons, data scientists. People who had built companies, managed teams, survived high-stress careers. And yet, the market chewed them up, again and again. It didn't make sense at first. These were people who could analyze systems, interpret probabilities, think abstractly. Why couldn't they trade? The answer is brutally simple: intelligence doesn't protect you from emotion. In fact, sometimes it makes things worse. Because smart people are used to solving problems with thinking. When something breaks, they analyze it. When they fail, they assume there's a missing piece of information they can find if they just try harder. But trading doesn't work that way. You can't outthink a panic attack. You can't use logic to eliminate fear. The problems in trading aren't intellectual, they're emotional. And the smarter you are, the more likely you are to overestimate your control. I've worked with traders who built algorithms that predicted price action with astonishing accuracy and still lost money. Not because the system failed, but because they couldn't follow it. They got bored. They got overconfident. They thought they could improve it in the moment. They wanted to feel smarter than the system they had built. That's the real trap for intelligent traders: the need to be right. I remember a guy named Pavel. Former physicist. He had built neural networks before most people even knew what that meant. He came to trading with models that were scarily accurate in testing. But every time his model called for a short, and the market popped against him, he would freeze. He'd start second-guessing the entire model, rewriting parameters in the middle of a session. Eventually, he blew through 3 evaluations in less than a month, not because the system didn't work, but because he couldn't surrender control. That's what smart people struggle with the most: surrender. They want trading to reward their intellect, their effort, their insight. But the market doesn't care how smart you are. It only rewards your ability to follow your rules under pressure. Nothing more. This chapter might sting for some, but I'm not here to flatter you. I'm here to tell the truth. And the truth is, if you're smart, your edge can become your weakness the moment ego enters the trade. So what can you do about it? Here are 3 practical steps for intelligent traders who want to stop self-sabotaging. 1. Detach from being right. Instead of asking, "Was this a good trade?" ask, "Did I follow my process?" Make that the metric. Track it. Celebrate it. Force yourself to define success not by outcome, but by execution. 2. Outsource to structure. Build systems that remove decision-making. Predefined entries, exits, size all written in advance. Then commit to executing like a machine. If you want to innovate, do it on weekends, not in live markets. 3. Use a humility trigger. Create a reminder that no one is above the market. A note on your screen: "I can be wrong." Or better, "I will be wrong." Ground yourself with that before every session. It softens the ego and sharpens your edge. Trading doesn't reward who you are on paper. It rewards who you are in the moment. And in those moments, your degrees, your intellect, your brilliant insights, they don't protect you. Only your behavior does. So stop trading to feel smart. Start trading to be consistent. Because the market isn't an exam. It's a mirror. And if you're willing to look into it honestly, it will teach you more about yourself than any classroom ever could. Chapter 4. The role of fear and greed. Fear and greed. Those 2 words show up in every trading book, every psychology article, every podcast. But for most people, they stay theoretical, vague concepts you nod at but never actually deal with. For me, they were real. Physical. They showed up in my breathing, in the way my mouse hand tensed, in the 1,000 tiny decisions I made every session without even noticing. Fear was the one I met first. I remember my first losing streak like a trauma. 3 trades, back to back. I had followed my plan. I hadn't done anything reckless. But the market just didn't respond. The 4th trade came, and suddenly everything felt heavier. I hesitated. I checked the news. I resized the position 3 times. The edge was there, but I couldn't pull the trigger. I was afraid of being wrong again. I didn't lose the trade because the setup failed. I lost it because fear made me hesitate, and that hesitation became the new habit. And then there's greed. Greed isn't always loud. Sometimes it's just this subtle whisper in your head: "One more. Just a little more. You're almost there." It shows up strongest after a win. I'd finish a solid session, up $400, feeling great. And then, for some reason, I'd open another trade. No plan. Just this magnetic pull to make it $500. Then I'd give back half the gains. Then try to fix it. You can guess how that story ended. I once worked with a trader named Hassan who had turned a $50,000 funded account into over $90,000 in 2 months. He was precise, calm, methodical until the moment he wasn't. One day, he hit $98,200. He saw the 6-figure target just around the corner, and he got greedy. He doubled his risk on a single gold trade. It went against him fast. He didn't cut it. He added. You already know how this ends. In one day, he was back at $76,000. He took a week off, but when he returned, all he could see was what he lost. Not money identity. He overtraded for 2 weeks straight, and the account was closed at $48,000. All because he chased a number. Fear makes you passive. Greed makes you reckless. Both distort reality. They create a fantasy world where the charts are no longer about probabilities, they're about emotion, about stories you tell yourself. That the market owes you. That your edge will work this time. That walking away would make you weak. But here's the truth: fear and greed never leave. They live in the room with you. What changes is how you relate to them. Whether they get a voice or a vote. So how do you keep them from taking control? Here are 3 practical steps that have helped me and many others keep fear and greed in check. 1. Use predefined daily limits. Set both a maximum loss and a maximum gain for the day. When either one is hit, you stop. No debate. This removes emotional trading after strong wins or losses, when you're most vulnerable. 2. Set intentions before you trade. Before each session, write down your trading goals, and they can include money. Things like I will follow my stop-loss rules or I will take only A+ setups. Focus on behavior, not outcome. 3. Close the platform when done. Physically shut down your trading software once your session ends. Don't keep the charts open just in case. You're not watching the market, you're waiting for temptation. Fear and greed aren't flaws. They're human. But you can't let them be the ones clicking your mouse. If you want to last in this game, you need a system for managing your emotions, not just your trades. Because in trading, the biggest wins don't come from beating the market. They come from beating the part of yourself that wants to destroy everything you've built. Chapter 5. Revenge trading: the cost of ego. I didn't think I had an ego problem. I wasn't arrogant. I didn't brag about trades. I didn't post charts on Twitter or try to flex my profits. But the market didn't care about my personality. Ego shows up in silence. In thoughts you don't say out loud. In reactions you don't even know you're having. My first taste of revenge trading came after what I thought was a perfect setup. I had been stalking it for days: a textbook confluence, perfect volume, every box checked. I went in confident. Not oversized, just strong conviction. Then, out of nowhere, the market flipped. News I hadn't seen hit the tape. In a flash, the trade was red. I took the loss, but it didn't feel like just a losing trade, it felt like a betrayal. Like I had been wronged. Without thinking, I started scanning for another setup. I wasn't planning. I wasn't even seeing clearly. I just needed to hit back. To get back what I lost. The next trade wasn't part of the plan. It was personal. And of course, it went red too. That was the moment the spiral began. Revenge trading isn't just about trying to make money back. It's about making yourself feel whole again. Your ego takes the loss personally, like the market insulted you. And then it demands a response. You're not just trading anymore, you're trying to restore your identity. I once knew a trader named Chris. Ex-military. Hyper-disciplined guy, incredibly methodical until he lost. He was fine with small losses. But whenever he got stopped out of a trade he really believed in, something snapped. He wouldn't just re-enter, he'd double down. Once, after a series of 3 losses on NASDAQ, he added size, doubled his position, and tried to teach the market a lesson. That was the day he blew his funded account and had to start all over again. When we talked later, he said something I'll never forget: I didn't blow the account. My ego did. The problem with revenge trading is that it feels like strength. You feel powerful. Defiant. Alive. But what you're really doing is handing the steering wheel to your most unstable self. Trading requires detachment. When a setup fails, you let it go. You don't fight it. You don't try to fix it. You move on. Because the moment you make it personal, you've already lost, even if the trade works. So how do you prevent revenge trading when your ego is screaming for justice? Here are 3 practical steps that will help you stay grounded when the pressure hits. 1. Use a loss-triggered timeout. If you take a loss above a certain threshold, not just in money, but in emotional impact, step away for 15 minutes. Stand up, leave the screen, reset. This gives your rational mind time to catch up before your ego takes over. 2. Name the emotion. When you feel the urge to strike back, say it out loud or write it: I want to get this money back. Naming the emotion takes away its power. It forces you to acknowledge that you're no longer trading objectively. 3. Create a ritual exit button. Keep a physical object: a pen, a coin, a sticky note, and use it to mark the moment when your session is over. Touch it, move it, or flip it. Make it a habit. This builds a psychological break between trading and revenge impulses. Revenge trading is one of the fastest ways to destroy an account, not just financially, but emotionally. Because it doesn't just cost you money. It costs you trust in yourself. And once that's gone, everything becomes harder. Your job isn't to win every trade. Your job is to stay in the game. And that means leaving your ego at the door every single day. No matter how personal the market makes it feel, it never is. It's just price. And price owes you nothing. Chapter 6. Discipline versus motivation. For a long time, I waited to feel ready. I thought trading was like sports or art, that I needed to get in the right zone. That if I was inspired, if I was focused, if my mind was sharp, then I'd perform well. And sometimes, that was true. I had incredible days when I felt locked in, aware, confident, fully present. But those days were rare. Most of the time, I didn't feel like trading. I felt tired. Or distracted. Or unsure. And on those days, my performance was all over the place. I'd overtrade, skip setups, hesitate. Then I'd blame myself, telling myself I just needed to want it more. What I didn't understand back then was that motivation is a liar. It shows up when it wants. It leaves without warning. And if your trading performance depends on it, then so does your consistency. Discipline is different. Discipline doesn't care how you feel. It shows up whether you're excited or drained, confident or scared. It's built from commitment, not emotion. I once mentored a trader named Elena, a single mom from Poland who traded during the London session before taking her kids to school. She didn't have the luxury of waiting to feel ready. She had a 90-minute window each day to get it done. And yet, she was one of the most consistent traders I've ever seen. Why? Because she treated trading like a job. Not a fantasy, not a game, not a dream, a profession. She followed her plan even when she was exhausted. Even when she doubted it. Even when she hated the market. And the results added up, quietly, day by day. The truth is, the traders who survive and thrive aren't the ones with the strongest drive. They're the ones with the strongest systems. They don't need motivation to execute. They have standards. They have structure. They trade because that's what they do, not because they feel like it. Motivation can give you good days. Discipline gives you a career. So if you're waiting to feel ready, stop. Start building systems that make action automatic, not emotional. Here's how to begin. 1. Create a daily trading checklist. Before each session, complete a checklist. Did I review the economic calendar? Have I defined today's bias? Have I marked my key levels? Have I slept well, eaten, checked my mood? Print it. Follow it. Repeat it every day until it becomes muscle memory. 2. Limit your options. Choose 1 or 2 setups to focus on. When there are fewer decisions to make, it's easier to act with consistency. Discipline loves simplicity. Give it fewer battles to fight. 3. Use time-based sessions. Decide when you start and when you stop and stick to it. Whether you've taken a trade or not. This builds structure into your routine and prevents those long, drifting sessions where discipline dies and boredom invites chaos. If you want to be a trader, act like a professional, not an artist waiting for inspiration. The market doesn't care about your mood. It doesn't wait for your best self to show up. But it will always reward consistency, structure, and discipline. Your feelings are real, but they're not required. Show up anyway. Chapter 7. The myth of the perfect strategy. In my first year of trading, I must have downloaded over 20 strategies. Price action setups, supply and demand models, order flow systems, Fibonacci sequences, moving average crossovers, you name it, I tried it. And every time one failed, I'd ditch it and search for something better. I told myself I just hadn't found the one yet. That once I did, everything would click. No more second guessing. No more drawdowns. Just confidence, clarity, and green days. It took me years and several blown accounts to realize that the strategy was never the problem. The real issue was that I believed in a fantasy that there was a perfect system out there. One that would never let me down. One that would make me feel safe. That fantasy is dangerous. It's what keeps traders hopping from one setup to the next, never building mastery. It's what makes them change their rules after 2 losing trades. It's what convinces them that the next course, the next guru, the next algorithm is the missing piece. But it's not. Because the truth is, almost any reasonable strategy can work. What matters is how well you follow it. How consistently you apply it under pressure. How deeply you understand its edges and its limits. The best traders I know don't have the most complex systems, they have the deepest commitment to their process. I knew a trader named Marcus who made a full-time living trading nothing but the opening range breakout on the SAMP. 1 trade a day. Same criteria, same time window, same risk. He didn't touch anything else. I once asked him if he ever got bored. He laughed and said, "I don't trade to be entertained. I trade to get paid." Meanwhile, I knew another trader who spent every weekend building new strategies in TradingView, backtesting them to death, convinced that if he could just eliminate the losses, he'd finally be ready. But the problem wasn't the strategy, it was the belief that losses meant something was wrong. That perfection was possible. Losses are part of this game. So are drawdowns. So is being wrong. You don't need a strategy that avoids them. You need a mindset that can handle them. So here's your call to action: stop chasing the perfect setup. Choose one that makes sense to you and then commit to it. Study it. Trade it. Learn how it behaves in different conditions. Give it time. Because the more you trust your process, the less power your emotions will have over you. Here are 3 steps that helped me finally let go of the perfection myth. 1. Pick one strategy and stick to it for 30 days. No switching. No tweaking. Just one strategy, trade it with discipline for a full month. Win or lose, your goal is to build consistency and gather data. You're not trying to win, you're trying to learn. 2. Journal each trade like a scientist. Don't just log the numbers, write out your thoughts, emotions, hesitation, confidence level. This creates a feedback loop that helps you improve your execution, not just your rules. 3. Track process metrics, not just Pendulum. Did you follow your entry rules? Did you respect your stop? Did you skip impulsive trades? Score yourself on behavior, not just outcome. That's how real growth happens. There's no perfect strategy. But there is a version of you that's disciplined, patient, and skilled enough to make even a simple one work. That's the trader you need to build. And that trader doesn't need perfection. They need mastery. Mastery of the strategy, and more importantly, mastery of themselves. Chapter 8. Cognitive biases that kill traders. I used to think I was rational. That I was the kind of person who made logical, data-driven decisions. I didn't trade on tips. I didn't chase pumps. I wasn't impulsive. But then I started looking closer. Really paying attention. And what I saw was hard to admit. I wasn't making clean, objective decisions. I was falling into traps, mental shortcuts, emotional patterns that were quietly destroying my edge. They call them cognitive biases. And once you learn to spot them, you start seeing them everywhere. The first one that nearly wrecked me was confirmation bias. I'd get an idea in my head, say, that gold was about to drop, and suddenly, all I could see were bearish signals. Every tweet, every chart, every little wiggle in price, I interpreted as proof that I was right. I didn't even realize I was filtering out the evidence that contradicted my view. I wasn't analyzing, I was looking for validation. And when the trade failed, I'd be confused. Angry. But it was me who chose to ignore the signs. Then came the sunk cost fallacy. That's the one where you stay in a trade, or worse, add to a losing position because you've already invested too much to walk away. I remember a NASDAQ trade where I broke my own risk rules because I had already held it for 3 hours, watched it draw down, recover, then dip again. I didn't want all that waiting to go to waste. So I held. And lost double what I should have. Not because the trade was good, but because my ego couldn't accept the cost. And then there's anchoring. That one is subtle. You enter a trade, and the moment it goes a few ticks in your favor, you lock in a target. Say, $300. Suddenly, anything less feels like a disappointment. Even if the market gives you $180, you pee back on it because you anchored to that first number. And when the trade turns and stops you out, you feel robbed. But you weren't robbed. You ignored reality to chase an illusion. I've seen traders lose not because they had no edge, but because their brain tricked them into believing things that weren't true. And these tricks don't feel like illusions, they feel like instincts. Like gut feelings. That's what makes them dangerous. I once coached a trader named Victor, who had a strong win rate and great timing, but every time he started building momentum, he'd wipe out 2 weeks of gains in a single day. When we broke down his trades, we saw he was anchoring every session to the profit he made the day before. If he'd made $400 on Monday, he felt like he had to beat that on Tuesday. That invisible benchmark shaped every decision he made and made him reckless. His bias wasn't in his strategy. It was in his expectation. Trading is not just technical. It's psychological warfare. And some of the most dangerous battles happen without us even knowing it. Our minds love patterns, stories, shortcuts, but the market doesn't play by those rules. And if we don't learn to question our thinking, we'll keep making the same mistakes forever. So how do you defend yourself from your own brain? Here are 3 practical steps to help you overcome the most common cognitive biases. 1. Use a pre-trade checklist that includes a bias check. Before entering a trade, ask yourself, am I seeing what's there, or what I want to see? Write it out. This builds self-awareness and helps separate analysis from emotion. 2. Journal trades with a focus on decision triggers. After every trade, write down why you entered and exited. Look for emotional justifications, assumptions, or moments where you ignored your own rules. Over time, this will expose recurring biases. 3. Have a bias buddy or use voice notes. Before a high conviction trade, explain your reasoning out loud. either to a trading buddy or into a voice note. Saying it forces you to slow down and hear your own logic. If it sounds weak or emotional, that's a red flag. You can't eliminate bias, but you can reduce its power. You can build systems that keep your thinking clean, your decisions grounded, and your trading consistent. Because the biggest threat to your success isn't your setup, the market, or the news. It's your own mind and the stories it tells you that just aren't true. Chapter 9. Trading and Emotional Fatigue. There's a kind of tiredness that sleep doesn't fix. I learned that from trading. I used to wonder why I'd make decent decisions early in the day, but by the afternoon, my judgment would collapse. I'd overtrade, violate my rules, take setups I knew were garbage, all while fully aware of what I was doing. It wasn't ignorance. It wasn't even impulse. It was emotional fatigue. You can be rested, caffeinated, and ready and still trade poorly if your emotional capital is drained. Most people think of capital only in terms of money. But there's another type: internal capital. The energy it takes to stay focused, follow a plan, resist temptation, and manage uncertainty. That capital is limited. And once it runs out, you become someone else, a version of yourself that's reactive, sloppy, impatient. I once had a day where I had no intention of trading after the morning session. I had hit my goal, walked away, went for lunch. But then, in the afternoon, I saw a big move on oil. I jumped in without my pre-trade process. Took a loss. Then another. Then I tried to fix it. By the end of the day, I had given back everything, not because the market changed, but because I was mentally empty. It's easy to underestimate how draining trading is. Every candle, every fluctuation, every second of staring at the screen is taking something from you. Even if you're not in a trade. Your nervous system is activated. Your attention is fragmented. You're constantly assessing risk, timing, noise, and pressure even when you're doing nothing. I've seen this pattern destroy otherwise disciplined traders. They start strong in the morning, then slowly unravel by midday. Some stay glued to the screen for 6, 7, 8 hours straight. No breaks. No resets. Just constant stimulation. And then they wonder why they spiral into overtrading or revenge trades. It's not lack of skill, it's burnout in disguise. One of my clients, a swing trader named Jeremy, once told me he didn't even like trading anymore, and this was someone who used to love the markets. When we unpacked it, we found out he was checking his phone every 10 minutes, tracking positions obsessively, losing sleep over overnight trades. It wasn't trading that burned him out, it was the constant mental engagement. He never unplugged. So his nervous system never recovered. Emotional fatigue is silent. It doesn't come with a warning. But once it sets in, your trading becomes reactive. Desperate. Sloppy. And the worst part is, you don't even realize it until the damage is done. So if you want to stay in this game long term, you have to protect your emotional capital like it's your account balance. Because in a way, it is. Here are 3 practical ways to manage emotional fatigue and protect your edge. 1. Set a maximum screen time per day. Decide ahead of time how long you will be actively engaged with the market and stick to it. For many day traders, that's 2 to 3 hours max. After that, your edge declines, even if you don't feel it. 2. Build in forced recovery breaks. Every 60 to 90 minutes, take a full break, no charts, no news, no screens. Walk, breathe, disconnect. These resets preserve focus and restore willpower. 3. Have a post-session shutdown ritual. When your trading session is over, shut everything down. Literally. Close your platform. Log off. Mark it in a journal. This signals to your brain that the session is finished, which prevents you from staying mentally tethered to your trades for the rest of the day. Trading isn't just a test of skill. It's a test of stamina, not physical, but emotional. And the traders who last aren't the ones who hustle harder. They're the ones who learn how to recharge, reset, and protect their mind like they protect their capital. Your brain is your account. Guard it. Chapter 10. Journaling like a professional. I used to think journaling was just homework. Something people said you should do, but no one really stuck to. I'd write a few lines after a trade, maybe jot down the pendulum, tell myself I was being disciplined. But deep down, I didn't really see the point. I just wanted to get better and faster. But better doesn't happen faster. It happens deeper. Everything changed for me the moment I stopped journaling for the sake of journaling and started journaling to learn who I was as a trader. Because here's the truth: the journal isn't for tracking results. It's for tracking you. How you think. How you react. Where you break your rules. Where fear creeps in. Where you hesitate, where you rush, where you sabotage your own edge. When you trade, you're not just executing a setup. You're expressing your internal state. And unless you're tracking that internal world, you'll keep repeating the same mistakes and you won't even know why. I still remember the first time I saw my own pattern in black and white. I had printed out 2 weeks of trades. And there it was plain as day, I was breaking rules only after my first big win of the week. Every time I made more than $400 on a Monday or Tuesday, I got reckless on Wednesday. It was unconscious. But the journal caught it. That single insight changed how I approached every session going forward. Without it, I'd still be stuck in that cycle. I've worked with traders who hated journaling until it saved them. Like Luis, a scalper who couldn't figure out why he was overtrading during the New York Open. Once we added an emotion tracking column to his journal, the answer popped. It wasn't the setup, it was anxiety before the bell. He was trying to settle his nerves by taking small scalps to get green. The journal didn't just expose the behavior, it gave us the leverage to fix it. The best journals aren't diaries. They're diagnostic tools. They help you see the truth without emotion. They show you what's actually happening, not what you think is happening. And the more brutally honest you are, the more valuable they become. You don't have to write a novel. You don't have to log every tick. But if you're not journaling your thoughts, your feelings, your patterns, you're flying blind. You're leaving all your future improvements to chance. So let's make this simple. Here are 3 practical ways to journal like a professional. 1. Log the story, not just the stats. For each trade, write down what you were thinking and feeling before, during, and after. Just a few sentences. Were you confident? Anxious? Did you hesitate? This turns your journal into a mirror. 2. Track your rule violations, not just results. Create a rule score for each trade. Did you follow your entry criteria? Stop loss placement? Sizing rules? Exit strategy? Grade yourself. This builds accountability and exposes behavior patterns. 3. Review weekly, not just daily. At the end of each week, step back and look for themes. When do you perform best? What triggers your worst trades? What's improving and what's repeating? This is where growth happens. Your journal is your greatest trading coach if you use it. It won't lie to you. It won't flatter you. But it will show you the truth. And in this game, the trader who sees the truth wins. Chapter 11. Expectations, Identity, and Self-Sabotage. Some of the worst trades I've ever taken had nothing to do with the chart in front of me and everything to do with the image I was trying to protect. When I started trading, I had this idea of who I was supposed to become: the disciplined trader, the self-made success, the person who never cracked under pressure. I built that identity in my head. And I tried to trade in a way that confirmed it. The problem is, that identity came with invisible expectations. I wasn't just trading for profit, I was trading to prove something. To myself, to others, maybe even to people who weren't watching. And when things didn't go according to plan, the pressure to protect that image would take over. That's when the self-sabotage would begin. You'd think blowing an account comes from being careless. But often, it comes from caring too much. About being right. About being seen as consistent. About recovering quickly from a loss so no one sees you weak. I remember a trader named Nico, brilliant, sharp, intense. He went from a $25,000 funded account to $70,000 in 6 weeks. But once he hit $70,000, he stalled. Not because his edge stopped working, but because he started to believe he was supposed to be that guy, now the 6-figure trader. That belief created pressure. And that pressure triggered self-sabotage. He would get close to $80,000, then lose $2,000 in a single session. Do it again the next week. It became a pattern: climb, collapse, reset. His identity wasn't aligned with his results, so subconsciously, he kept resetting them. What we believe we deserve shapes what we allow ourselves to achieve. That's not philosophy, it's reality. You might think you're just placing trades, but you're actually enacting a self-image. If deep down you believe you're someone who always messes up when it counts, or who can't be trusted with success, or who has to suffer before they win, then that's exactly how you'll trade. The markets aren't just testing your discipline. They're exposing your self-concept. The good news? You can change it. But first, you have to tell the truth about the gap between the trader you want to be and the one you're acting like. Here's how to begin. 1. Write your default trading identity. On paper, describe the trader you are when no one's watching. What do they believe about success? About failure? About risk? Be raw. This is the unconscious story driving your decisions. 2. Define a new identity in clear terms. Write a short description of the trader you want to become. Not in fantasies and habits. I follow my plan even after losses. I walk away when I hit my limits. Read it before every session. Make decisions that confirm it. 3. Detach from outcome, attach to integrity. Instead of asking, how much did I make today? Ask, did I behave like the trader I want to be? This rewires your internal reward system and breaks the cycle of emotional trading. You don't rise to your goals. You fall to your identity. If you don't upgrade how you see yourself, no amount of strategy will change your results. The market will always reflect what you believe about yourself. If that belief is rooted in fear, shame, or limitation, your trades will show it. But if you build a new story and back it with action, the sabotage ends. You don't just need a better plan. You need a better you. Chapter 12. The addiction to trading when the market becomes a drug. There was a time when I didn't trade for money. Not really. I told myself I did. But the truth was, I traded for the feeling. The rush of being right. The jolt of entering a position. The dopamine hit of watching the pendulum swing up, down, up again. Trading stopped being a job and started feeling like something else, something I needed, even when it didn't make sense. I'd open my platform at night just to check a level and end up in a trade. I'd finish a winning day and feel this strange emptiness like it wasn't enough. I'd finish a losing day and feel this magnetic pull to redeem myself. It wasn't even about recovering money, it was about recovering a sense of control. That's when I realized this wasn't just trading. It was compulsion. Trading can easily become a behavioral addiction. It has all the ingredients: uncertainty, risk, reward, rapid feedback, highs and lows. Just like a slot machine. The longer you stare at the screen, the more likely your decisions are being driven by emotion, not logic. But unlike gambling, trading hides behind the illusion of productivity. I'm doing research. I'm watching the market. I'm being disciplined. No, you're feeding an itch. I saw this with a trader named Alex, who never missed a New York session in over a year. Never. Not once. At first, it looked like discipline. But over time, you could see the cracks. He'd trade through illness, through family events, through exhaustion. He said it made him feel alive. But if he went a day without trading, his anxiety spiked. It wasn't commitment, it was addiction wrapped in the language of professionalism. There's a difference between being passionate about trading and being dependent on it. One energizes you. The other drains you. One makes you sharper. The other distorts your thinking. And the worst part? The more addicted you are to the experience of trading, the worse your results get, which only deepens the emotional hole you're trying to trade your way out of. This chapter might hit hard. That's okay. You need to be honest about what role trading plays in your life. Is it a tool? Or is it a drug? Here's how you take your power back. 1. Implement trading-free days. Schedule at least one day per week when you do not trade, check charts, or engage with the markets. No exceptions. This helps reset your nervous system and proves to yourself that you can function without the dopamine. 2. Create a ritual to mark the end of your session. When you finish trading, do something physical to mark it. Close your laptop, write a one-line summary in your journal, walk away from your desk. This signals your brain that the session is over and stops the endless mental loop. 3. Track time spent, not just trades taken. Log how much time you spend around trading, watching, researching, reading, thinking. Most addicts don't realize how much of their life is being consumed. Measure it to take control of it. You don't need to trade every day. You don't need to always be in a position. You don't need to feed the high. The market will always be there. But your peace of mind won't unless you protect it. Trading is supposed to give you freedom. If it's taking your sleep, your focus, your relationships, your health, that's not freedom. That's a prison. Step back. Take a breath. Reclaim your discipline. Because your best trades will never come from addiction. They come from clarity. Chapter 13. The truth about drawdowns. There's a kind of pain only traders understand, the pain of watching your equity curve sink while your confidence sinks even faster. My first serious drawdown wasn't just financial. It was personal. I had been on a good streak, slow, steady growth, a few green weeks in a row. I started feeling something dangerous, belief that I had figured it out. Then came the losses. One, then another. Then a third. The setups hadn't changed, but my expectations had. And as the red days piled up, something inside me started to rot. Not just doubt, shame. Like I had broken something that couldn't be fixed. Drawdowns are not just a statistical reality. They are a psychological crucible. They test everything: your patience, your risk tolerance, your identity. They expose whether you actually believe in your system or whether you were just riding the wave. I remember one week during that first major drawdown when I started questioning everything. Not just the trades. Me. Maybe I wasn't cut out for this. Maybe I'd just gotten lucky before. I started looking for new strategies, then stopped, because I knew it wasn't the system. It was my belief in the system that was breaking down. That's when I understood the truth: the most dangerous part of a drawdown isn't the financial damage, it's what it does to your decision making. You start pressing. You try to force the comeback. You abandon rules to chase redemption. You go from being a strategist to a gambler, all in the name of getting back what you lost. I've seen this ruin more traders than bad setups ever have. There was one trader I knew, a quiet guy named Asan, who ran a tight system on the Russell futures. He was methodical and calm until he hit a 12-trade losing streak. He didn't oversize. He didn't revenge trade. What he did was worse, he stopped trading altogether. Froze up for 6 weeks. Told himself he'd wait for perfect conditions. They never came. Eventually, he quit. Not because he was a bad trader but because the drawdown infected his self-trust. We all face drawdowns. They're not a glitch, they're part of the process. Every system has variance. Every edge has cold streaks. Even casinos with all their odds in their favor lose money some nights. It doesn't make the edge disappear. It just means the game is honest. So if you're in a drawdown now, or if you've ever felt like one erased who you thought you were, this is for you. You are not your worst day. You are not your lowest balance. You are how you respond. Here are 3 steps that helped me stop digging and start climbing. 1. Switch to micro or sim mode temporarily. If you're emotionally compromised, size down aggressively or move to simulation. Focus on execution quality, not money. This rebuilds confidence without financial pressure. 2. Create a drawdown protocol ahead of time. Have a written plan for what you'll do when your equity drops 5%, 10%, etc. Include rules like pause trading, review past winners, reduce size, journal every session. Don't make decisions from the bottom, prepare while you're balanced. 3. Track recovery, not just decline. Drawdowns feel endless when you only look at losses. Start tracking wins during the recovery phase, no matter how small. Visualize the climb. This reframes your mindset from despair to progress. A drawdown doesn't mean your system is broken. It doesn't mean you're broken. It means you're in the phase every real trader goes through, the phase where belief gets tested, and real growth begins. The worst thing you can do is panic and rewrite your edge mid-storm. The best thing you can do is protect your capital, protect your mind, and keep showing up. Because the market doesn't reward perfection. It rewards persistence. Chapter 14. The loneliness of the trader's path. No one talks about how lonely this gets. At first, you don't notice it. You're busy learning, studying, experimenting. The market feels alive. Every candle is a conversation, every setup a new possibility. You feel connected to the charts, to the challenge, to the dream. But over time, as the months drag on, the screens begin to feel more like walls than windows. Your friends don't understand. Your family starts asking why you're still doing this. Is it working yet? How much have you made? You smile, nod, deflect. Because how do you explain to someone that your real battle isn't with the market, it's with your own mind? I've had days where I felt like a ghost. Watching the world move around me while I sat there in silence, watching candles tick. No meetings. No teammates. No deadlines. Just me, the screen, and the weight of my own expectations. It's not just solitude. It's emotional isolation. You celebrate your wins alone. You endure your losses alone. And worst of all, the people around you often think you're just playing on the computer. They don't see the war going on inside. I once spoke to a trader named Hannah. She had been quietly grinding for over 2 years, waking up at 4 a.m. for London Open, trading futures before going to her job. No one in her life even knew she was doing it. When she finally told her partner she'd passed a funded evaluation, he just said, "Nice," and went back to his phone. That moment shattered her more than any red day ever had. Trading attracts independent thinkers, but it also isolates them. And if you're not careful, the silence can start to eat away at you. You begin to question whether this journey is worth it. Whether you're crazy for even trying. Whether anyone will ever really get it. And yet, this loneliness can also be a forge. Because in that silence, you either break down or build something no one can take from you: internal stability. The kind of strength that doesn't need applause. The kind that doesn't chase validation. The kind that keeps showing up, even when no one sees. But you don't have to carry all of it alone. Here's how I began to protect my mind and my spirit during the loneliest parts of this path. 1. Create a trader's circle, even if it's one person. Find just one trader you trust. Someone who gets it. Someone who can listen when you blow an account or help you celebrate when you don't. It's not about quantity, it's about connection. 2. Set off-screen anchors in your day. Build a habit that pulls you out of the trading bubble: a walk, a workout, coffee with someone, anything physical and real. This reminds your nervous system that life exists beyond the charts. 3. Journal your wins: emotional, not just financial. Write down every time you respected your plan, walked away early, paused when triggered. These victories often go unseen by others, so make sure you don't miss them. It keeps the fire alive. Trading isn't just hard because it's complex. It's hard because it's solitary. You walk this road largely alone, but it doesn't mean you have to feel lost. The silence will teach you. But don't let it isolate you. Build your own rhythm. Your own meaning. Your own small community, even if it's just within yourself. And never forget there are thousands of us out there, walking this same lonely road, quietly, patiently, with the same fire burning. You may be alone in the room, but you're not alone in the journey. Chapter 15. The trader you're becoming. There comes a moment when you realize this whole journey was never about the market. Not really. Yes, we studied the charts. Yes, we learned setups and strategies, risk models and execution rules. We train ourselves to think in probabilities, to manage uncertainty, to tolerate boredom and chaos. But beneath all of it, beneath the candles and indicators and trades, this was always about one thing: becoming someone you can trust. When I first started trading, I thought the goal was freedom. Financial freedom, time freedom, location freedom. I thought I was building a machine that would give me more life. But the deeper I went, the more I realized the real work wasn't in mastering the market, it was in mastering myself. Because trading doesn't just ask what you know. It asks, can you stay patient when everything screams for action? Can you hold your line when fear whispers in your ear? Can you let go of a loss without letting go of yourself? Every chart is a mirror. Every session is a test. And every day, the market gives you a chance to become someone sharper, calmer, more grounded, or someone weaker, more impulsive, more afraid. And that choice is always yours. You may not be where you want to be yet. Maybe your results aren't consistent. Maybe you're still fighting your demons: hesitation, greed, anger, doubt. That's okay. We all start there. But if you're still here, still reading, still showing up, still pushing through, then something inside you is stronger than all of that. And that something is the seed of the trader you're becoming. Not a perfect trader. Not a fearless one. But a real one. The kind that trades with clarity. With respect for risk. With patience that took years to earn. A trader who knows that discipline is a daily decision, not a talent. That losses are not failures, they're part of the contract we sign with uncertainty. A trader who doesn't just chase results, but builds character. You are not just learning a skill. You are building an identity. And every time you follow your rules, every time you walk away instead of tilting, every time you journal honestly or size down when afraid, you're casting a vote for the trader you want to become. Cast enough of those votes. And one day, you'll look up and realize you are that trader. So here's your final call to action 1. Write a letter to the trader you're becoming. Be honest. Be bold. Describe how they trade, how they think, how they behave under pressure. Read it before each session until the gap between who you are and who they are disappears. 2. Choose one non-negotiable standard. Pick one behavior that defines your process: never trading without a plan, always respecting daily loss limits, always journaling. Make it sacred. Build identity around it. 3. Reflect on progress, not just profit. At the end of each week, ask, what did I do better than last week? Where did I show growth? This keeps your focus on becoming, not just earning. You started this journey because you wanted more. But maybe, just maybe, what you were really looking for was you. The version of yourself that only this path could forge. Keep walking. Final message. The work begins now. If you've made it this far, you already know this isn't just about trading. This is about self-mastery. You've walked through fear, ego, fatigue, bias, and silence. You've faced the invisible enemies that destroy more traders than bad entries ever will. And maybe, for the first time, you've seen how personal this path really is. Because this isn't a game of intelligence. Or timing. Or luck. This is a game of behavior. And behavior doesn't change with willpower. It changes with systems. With self-awareness. With repetition. With accountability. And with a decision to stop being a trader who hopes. And start becoming a trader who builds. So don't let this video be just another insight. Let it be a turning point. Here's how. Your practical call to action. 5 steps to reinvent your trading psychology. 1. Create a trader constitution and sign it. Write 5 rules you refuse to break: daily loss limit, trade cap, max screen time, emotional check-in, journaling habit. Print it. Sign it. Make it sacred. 2. Use a 3-part daily checklist. Before trading, what's my plan? What's my state? During trading, am I following the plan or chasing emotion? After trading, what did I learn about myself today? 3. Schedule weekly reflection blocks, non-negotiable. Every weekend, set 30 minutes to review your trades, not just the pendulum, but the why behind each decision. This is where you train the internal edge. 4. Connect with one other trader on the same journey. Find someone to speak the truth with. You don't need a crowd, just someone who gets it. Someone who'll call you out when you slip and celebrate the process, not just the wins. 5. Choose identity over outcome every day. Instead of asking, did I win today? Ask, did I behave like the trader I'm becoming? Track that. That's where transformation lives. You are not just learning how to trade. You are becoming someone who can handle uncertainty, manage risk, and stay composed under pressure. And if you can do that in the markets, you can do that anywhere. So the next time you sit in front of the screen, remember this: you're not here to chase profit. You're here to build something rare. Something most people will never understand. Something no one can take from you. Discipline. Clarity. Control. Freedom. The work begins now.